Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Hello everyone, welcome back to another episode of Broker Daily Uncut. Your host Jack Campbell here, joining you in the studio. Tuesday today, we had a long weekend, King's birthday. What were the celebrations like? Was there much going on over the 3 days off?
No, it was quite cold. The weather was great.
You're kind of related to royalty, aren't you, Phil? Somewhere down the line.
I am.
Yeah,
I am. I try not to talk about it.
Don't you have some lands under your name in Scotland somewhere?
I do. I am actually a laird. I'm a Scottish laird.
Is that like you've got some passed down from family, or is it where you buy like a 1 by 1 metre bit of land and you get the
10
little...
by 10 metre piece of land.
Yeah, nice.
And I don't know where my certifications are these days, but I know I'm the laird of Glencoe, so I can actually go there and visit my land and
conduct ceremonies on it.
Conduct ceremonies and stuff like that. But I don't know where my paperwork is, so I doubt I'm still a laird.
You're gonna find it hanging on the wall.
It would be. It would be good for my shed to hang on the wall.
Nonetheless, a special weekend for you, particularly, Phil.
It was. It was a special weekend. I really didn't do a lot. I just hung out and did projects. I struggle being idle. I've always got to be doing something, which is probably to the detriment of myself. But I've got to be doing something all the time. I would always feel like I'm achieving something. Otherwise, I feel like I'm going backwards. So I don't know. I'm sure psychologists would have their views on that.
Well, opposite of me, I did absolutely nothing, which was lovely. But we're back into it again this week. We got some stuff coming up. I mean, we got the Broker Innovation Awards and Summit not too far away, a couple of weeks away. Be good to see everyone, the industry all getting together and all the people we chat to every day.
Big deal for Broker Daily. I think, forging a new, sort of a new mark in what we put out there for brokers. It's innovation. Look, it's a good framework to hold this event because innovation. Look, it says technology, and I'm sure that sort of AI-driven sort of insights are going to be at the fore for most people. But innovation still means doing things differently and doing things better. So I think it's got its own position in the marketplace, and look, attendance is going very well. So.
Are you podcasting from there? You're going to have your own podcast?
Yeah, we'll get something set up there.
We'll get something set up there.
Yeah,
so it sounds like you've thought long and hard about this so far.
It's all going behind the scenes. Don't worry, we're good. I got a banner made up.
You've got a banner and everything, have you?
Got a banner made up.
Are you going to be chatting with brokers there? Like,
I'll pull a few brokers in and do some live on the ground.
Talk about innovation.
Comments. Talk about innovation.
Can you have negative innovation? Innovation is only a positive thing, right?
I think
it's just new.
Innovation is new.
Innovative, new ways to do things. I've spent a little bit of time just outside of the beat of Broker Daily looking at AI and trying to make my own mind up. And I think sort of across all industries and across everyone, brokers included, agents and everybody, is working out. There are so many AI tools available now. And if you look at what's happening at with the headline, sort of big three LMMs, and then the next tier down, there is a danger that new things pop up and they get superseded really quickly. So working out what you subscribe to, and do you subscribe something now for $19 and it's free a little bit further down the line, or I think when things change so quickly, it's really hard to get a measure about working them into a long-term structured growth strategy for your business.
Well, I think one of the dangers of AI, and this is for mortgage brokers as much as any other profession, is that it's seen or deemed to be the panacea for a lot of the challenges you have in terms of process and manufacturing information. And one of the negatives of AI is that the speed at which it can create new stuff, and it can create information for your business or different apparatuses for shaping how you process stuff. You still got to execute that stuff, and you got to bolt it in, and you got to be consistent with it, stay to it. You can't just put something in and go, that's going to fix that problem. It's going to go away. You still need to dedicate time, energy, and effort and attention to it in order for it to be effectual. Now, if you keep shopping and chopping and changing from one new AI innovation to change the way you're doing something to the next one, you're going to find yourself not achieving a lot. So I'd say less is more. Be very clear about what, and you will hear this at the Broker Innovation Summit, hear what innovative ways in which you can shape your business through AI and target a couple of them and get them right before you do anything else, because otherwise you're going to spin your wheels.
Yeah, well, it's machine learning. It has to take some time to pick up and understand exactly what you're doing at your business and how it can support that. But again, it's not
But you think about it, right? Like you can jump on, and there's different AI tools for doing this, and say, I'm a mortgage broker. Write me a marketing plan for me to generate more leads, and AI can create you a marketing plan in a minute or two, right?
But you're right.
Yeah.
But here's the thing, and it will 95% of it will be good, and 5% of it will be made up.
Yep.
So if you go away and go, he's going to fix all these things, write my marketing plans, it can do my social media, it can do this, it can do that. It can do it largely, but if you haven't got the insight and the knowledge and the skill set to evaluate it properly, and I went through so with one of our colleagues, Blair Dodds, who heads up technology, he put together, this guy's sharp, right? And he put together a 17-page AI business plan for a new AI media brand that we're going to put together, right? And it's very, very impressive. But I went through that with a fine tooth comb, and one of the things that this particular this LMM came up with was it recommended an AI news channel. And I went and looked at it, and it was absolutely appalling. So I could easily have glossed it, because the rest of it was so impressive. I could have easily glossed over that and gone, oh, great, here we go. So using these tools are shining a light forward, and they can cut a lot of corners into. What they do is they structure things beautifully.
Yeah.
But you've got to be able to go through, if you're looking at a business plan, and really spend the time. You've still got to go through it thoroughly and use your own insight. If you just rely on the AI tool, you're going to end up with subpar direction. And the same with content, Phil.
Oh, absolutely. And yes, you can create a plan, a marketing plan, a business plan, whatever it is, right? It could be a customer engagement plan. It could be a client loyalty plan. Whatever it is you want to do, it would largely get there, but you still need to interrogate it and apply the human touch to it. And I've got a doctrine built up around that with content. But you still got to execute on it. Like you said, yes, it's told me what to do. Now I've got to do it. And the doing bit is the tough bit, particularly in mortgage broking. It's got to be process-driven, repeatable, predictable, measurable, all this sort of stuff, right? And AI might tell you what you need to do, but you probably still got to pick up the phone and talk to people. You probably still got to send those emails. You probably still got to work on building a robust marketing funnel with a tech-based sort of CRM. All that stuff you still need to do, right? So you've got to be very, very careful with AI. And I remember when AI first emerged, and I've been looking at it for years, but when it really hit sort of 2 years or so ago, I developed a doctrine for content creation with it. And I see AI for someone like me who's in the business of creating content, essentially as a wingman. Like you have your own assistant, your own researcher to help shape and influence how you go about creating, building, manufacturing things. And the same applies for mortgage broking. You should be seeing AI as a loyal wingman for supporting you shape the actions and activities for you to be more effective. And largely it's about having more bandwidth to either find more customers or provide better customer service.
You got two channels, right? You've got how I use AI through whatever I subscribe, through
Everyone uses it differently.
And then you've got custom built tools that are, some of them are absolutely mind blowing. We see them. It's not just in mortgage broking, across every facet of business, and it's understanding how to use those tools. There are some incredible shortcuts now through businesses that have built AI tools that brokers use across all spectrums of whether it's assessing and gathering documents. You look how fast you can do things. There's still, I've come in today, Phil. I wasn't going to do the podcast today, but I've come in because I've got to sign a mortgage document.
Yeah.
I've had to drive into the office today when I'm not supposed to be here.
A mortgage discharge
discharge form,
Because the bank still needs a wet signature.
Yeah.
I won't say which bank it is, but banks who you are, but they still force you to do it, right? Go, is it really genuine that the person really wants to discharge their mortgage?
If I look at other aspects of security as a borrower, getting a mortgage, there are so many tools now, and let's split technology from AI. It all gets a bit sort of whitewashed with AI. But tech has really changed things hugely for the borrower and for the broker. So anyway, get down the AI summit.
Get there if you want to learn about...
not the AI summit. That's something different. That's something I'm working on elsewhere.
Shut up. Be quiet. But Well, when's it on? Where's it at?
It's 25th of June. I know the awards is at the Four Seasons. Where is the summit?
Oh, I thought mate, you've created a stand and everything, haven't you?
I know. I got to get on top of it, but that's a testament to our events team. They do a good job. But yeah, as you said, it's not the AI summit because I think innovation goes beyond just tech and AI. I was looking through the submissions, and some of them blew me away with how innovative it was, and it had nothing to do with tech. It was just that.
Are you going to invite me and Alex
innovation.
down to come and do a podcast live from there? Are you going to keep us away from places?
Nah, let's do it. I want to get everyone on the podcast. So we'll see you there, 25th of June. If you haven't got tickets, go check it out. It's going to be a great day. A lot of great people speaking, and you get to meet us. So come on down. Whether you love us or hate us, you can tell it to our face. We'll just throw to a quick break. We'll be back after this. Rams in the news again, under the attention of ASIC for breaching credit license.
So
that was about 4 years.
I'll give you a little bit of ancient history. So a long time ago, when Phil and I moved out of media at our previous job and forged out on our own, we did comms for a number of organisations. One of which was Rams. So we did all of their media, didn't we, Phil, for many years?
Yeah,
or for several years at least. Until in fact, we did their media up until the GFC hit, and I remember the phone call when they couldn't roll over their funding.
Yeah, that's
2007, late 2007.
That was probably one of Momentum's earliest.
Worked with Hugh Bow.
Yeah, Hugh.
Did a lot of work with Hugh Bow, helping support him in his role at Rams.
They were. Rams was very much part of this emerging cohort of new ways in which people skewered finance. You had Rams, you had Resi, you had Wizard, you had.
To be fair, I mean, not to challenge you, but they were not really emerging. They were very, very established, and they were really. It was really at the sort of on the surge of non-bank lending. It was at the tail end of the advantages that non-bank lending brought to borrowers with the greater flexibility in terms of the products that were available, the significantly better pricing. But the majors had, and the banks had started cutting their very, very fat margins, and you were in a race that couldn't be sustained from the non-banks.
And that's when the banks started buying up the non-banks.
And then our friends in America wrecked it for everyone. Sparking the GFC and of course Rams and many other non-banks were dealt very savage blows when it came to funding, and it changed the landscape here in Australia.
Well, it had a lot of organisations, which I would say were analogues or peers. Your Aussies, for example, turned into mortgage brokers at that point in time.
And so at that point,
Aussie actually moved into mortgage broking a little bit before that, not wishing to be a.
Did they?
Yeah.
When did Aussie move into mortgage broking?
I would say probably 2003.
Pre-GFC.
Yeah. Yes, I can remember. Going back to my earliest days with when I first started in 2001. That Aussie were very much. It was Aussie and it was Rams, very much, and also Wizard, very much the sort of the non-bank brands at a sort of a franchise level. You had got your Resis and a few others, but they were sort of smaller brands.
So Aussie moved first.
Aussie moved first, yeah.
Yeah, okay.
And I can remember the controversy from Aussie, who had really demonised brokers. I'm going back a long, long way. Yeah. James, John, if you're tuning in. I'm sure you'll understand what I'm saying. But they very much demonised brokers. I'm going back, sort of 25 years because they were a non-bank linear proposition with very sharp pricing. And they had and John James saw what was coming way before GFC and moved that business. If I'm wrong, anyone who's tuning in, I seem to remember about 2003.
Well, I think your obligation to the mortgage industry, Alex, would be a book at some point about the history of the history of mortgage broking in Australia, written by AI. I'm sure we can get someone to write it these days. But
no one to read it.
Yeah. So what's happening with Rams?
Sued for misconduct. They had a long list of stuff they'd done, but it's all allegedly, by the way, so nothing proven yet. Westpac sort of came forward and acknowledged it.
How big is that?
Together.
How many people still have a Rams home loan?
No idea.
How big?
You don't hear much about them.
You would have thought it would have refinanced that way. They're not originating. There would be no one originating Rams. I don't know. I'm so disconnected with what Rams does these days. But,
they seem to pop up when they're in trouble, because it was not long ago that they had some fraud suspicions going on there
wouldn't
as well.
Want that going on.
I'm going to give a shout out though, because I know a lot of people who've run Rams franchises who've done an outstanding job.
Yeah.
And they did do back in the day. And look, there's been some things that have come out, sort of malpractice. But there's a lot of people who've run Rams franchises all over and have gone through that transition, have done the right thing for their customers. They're a high street brand. And again, going back to sort of the transition, I remember there was a debacle and arguments about whether they should win non-bank awards that we'd put up when they'd been acquired by Westpac, and we stood firm and said no, they're not a non-bank. But the people who have worked in Rams and gone through that transition and continue to do the right thing.
Well, some of the stalwarts and stewards of the growth in mortgage broking. Last time we got together, I think your number was 76.8% 76.8% of all loans. Much like Aussie, much like Wizard, much like Rams, these nascent businesses, early days of mortgage broking, cultivated a generation of talent, with many of them now senior executives in lenders, but it also was born a lot of the brokers of today out of these capabilities. And even going back to the the Broker Innovation Summit, which is coming up at the end of June, we have one of the speakers there is Todd Duncan, who was a key trainer for Aussie during those very early days of Aussie, and a lot of those very talented people that went through Aussie training are now right across the industry in very senior and significant positions, ensuring the ongoing growth. So, those early non-banks have a lot to be proud of, and in many ways are formative to the growth of the industry, but you don't want to be done for malpractice.
How is Aussie the only one who seems to be sticking strong?
Well, Aussie bought Wizard.
It's probably a topic for another podcast.
Yeah. Aussie bought Wizard, I think.
But and again, going back to that, so
NAB nearly bought it.
was going to. We got a press release from NAB saying that they bought Wizard, and
so Christmas Eve.
It was on Christmas Eve. And I was flying back to the UK, and we said, should we just wait until the deal's done? They went, no, go ahead and publish it. We published it. I got off the plane in the UK to see that at the last minute, Aussie had come in and they'd bought Wizard. They'd just gone and absolutely just gone in there. It was,
Christmas miracle.
Yeah, maybe.
2008 that was.
God.
Well, yeah, it's all going on, but good to see that they've addressed the issue and are working to resolve it. Anyway, we'll keep you updated with what goes on with that, but we'll just throw to a quick break. We'll be back after this. And we're back with Broker Daily Uncut now. I know something you wanted to touch on, Alex. Effective today, 10th of June, if you're listening to this as the podcast comes out, the new buy now, pay later regulation coming into effect from ASIC. So borrowers should be aware, their credit that they have with these providers now impacts their credit scores, impacts their borrowing capacity. So
how much credit is, I know very little about BNPL lenders. I've never used a BNPL lender. I don't use a credit card now because I can't be trusted. I learned that a long time ago. I'm serious, I didn't have a credit card for years, and then I started traveling, and they went, you got to have a credit card to go and book into a hotel. And I got one, and it straight away into loads of strife. So I use a debit card. So this is, something I haven't used. But I wonder what kind of level of debt there is out there on BNPL providers. And then it does factor into, for borrowers or for consumers, if you don't understand the nature of, you get told this is a great way for you to get what you want, you end up with debt. And now that's being brought into consideration when you start applying for a loan. It's going to be a big deal. How much debt is there out there on this? Do you have any idea?
I have no idea, but I do know, we were just talking before the show, and I know a lot of people, when this was really popular a few years back when I was going through uni, a lot of mates that got a lot of debt racked up from different providers of these things.
What do you mean, like thousands of bucks they'd be on the whole for?
Thousands. So a lot of debt for someone who,
which is a lot, right? If that's your paycheck each month as a part-time employee.
It is when you got to pay it back.
Yeah. So I stayed well clear of it, and I'm glad I did. But a lot of people got stung with the fees involved because it goes. The interest you pay is ridiculous on them. So I think a lot of people.
Is it though? This is what I'd like to understand. It's not like a credit card, is it?
It's credit. So you get the money, you buy something, and then you need to pay it off in installments.
But I had a feeling
there's a fee connected with it.
I thought the fee was very low with this.
It's not high.
Like credit card could be 20 plus percent.
Yeah, 21, 22%. If you pay down the debt within the installment regime set by it, it's a relatively cheap.
So it's like a credit card, whereas you got your free repayment stuff on your credit card, but if you don't,
then it ratchets it up. So the argument would be, and I'm not that familiar with the legislation, is that it is a credit facility.
Yeah,
it is money owed, and it's and it's a liability, and they've been able to sort of operate outside of that for a long period of time. There's a lot of people who are very critical of buy now, pay later, but the buy now, pay later, and it happens everywhere, right? We're selling a property at the moment, and there's a facility against it because the marketing cost is connected with a buy now, pay later orientated type of real estate platform where they've paid for all the marketing up front. They'll take the dough out of the proceeds of the sale. And I looked at it, it was a couple $100 and I went, yeah, sure, no worries, forget about it, right? But that is a very similar product. And
But it's a sophistication to understand. I remember, like my dad lent my brother some money years and years, decades ago, and he used a credit card to lend the money. He's very organised, my dad, some thousands of pounds, not tens of, and he just rolled it from credit card to credit card.
Kept moving it around.
Kept moving it around, not doing anything. But it was organised enough to understand how to use that. So had interest-free.
You keep it interest-free and you get like signing
because
on bonus
there would be
points.
So many credit card providers would go, oh, we'd like to take on your bank. You go, sure. Right. But the thing is, like, Phil, to your point with you using that facility in property, you've got a good grasp of. You run a pretty tight ship financially. There's a lot of people who don't have that sophistication, and they're not given all the, they're given all the sugary sweet coating from the providers to have what you want now, and it's all going to be cool, without much emphasis on the implications. And it's going to be a big deal for borrowing.
Right? Financial education is still, goes wanting in Australia considerably. A lot of parents think it's the obligations of schools to teach their kids financial education, and schools aren't teaching financial education. So you see people, when they graduate out of being a child into an adult and they're responsible for their own financial decision making, you buy now, pay later providers would say it's not a credit card. This is a modern way for young people to secure.
There's nothing wrong with the product
credit,
if you know how to use it.
If you know how to use it, but then people find themselves in a lot of problems. And it's a lot harder to roll over credit card balance statements, like you can in the traditional way. So a lot of people have been done through it, and I think it's right that it should be seen as a credit product.
Yeah, well, I think that's why a lot of people have problems with it. It's because the people that are utilising it often don't understand it. They're younger people who don't have much money to begin with, or single income families, and a fridge breaks or something and they need one ASAP, so they enter these agreements.
Tip, right? Like a hot tip for younger people, and I talk about this on the podcast stuff I do. When your lender is picking, when you're going for a loan, right? When your lender's picking through your statements to get a sense, and AI does it now anyway, but gets a sense for your discipline of spending money. When they see Uber Eats, buy now, pay later payment, buy now, pay later, Uber Eats, the machine instantly goes, yeah, nah. This person is probably not credit worthy, and it can be hugely detrimental. It takes a long time to be able to change that. Now, the role for mortgage brokers when they're working with younger people is to be engaging with them early and speak to your mortgage broker, or mortgage broker speak to your younger clients and say, you want 6 to 12 months of really good discipline and not having these stuff on your statements. Get beyond it. There's going to be a handbrake. So, interesting that they're doing that now, and I think it's long overdue.
Yeah, I think most people agree with you. I've had people reach out since we put this article up. We had comments in the comments section saying the exact same thing, overdue.
I think the product's fine. Back in my day when I was a university student working in a toy store, big part of my job was managing all the lay-bys. So people that have something on lay-by, there's a huge room full of lay-bys where someone would say, I want to buy that toy for my child for Christmas, it's June, and they would make 4 installments over the course of 6 months in order to pay for that thing so they could pick it up and put it under the tree. In advance. Completely the opposite of what buy now, pay later is. So bring back lay-by. I don't think it's a thing anymore.
When I first came to Australia, somebody asked me about lay-by and I hadn't got a clue what they were talking about. But it's a good idea.
Oh, it's a great idea, but you don't want to manage it anymore, right? It means you've got to hold the stock in storage somewhere, which is taking up valuable space, and it's a contingent thing. You've got to collect that money. You've got to, cure it on the way through. Where they just go, companies just want to ship it straight away, particularly digitally. You know, you can't do lay-bys on a internet e-commerce shopping, right? They just want to move the product. They don't even want to touch it anymore. They want it to go directly from the manufacturer to the to the thing. So it's this is the way of the world, unfortunately.
Yeah.
Teach your kids how to be financially responsible.
Well, that's a good way to end it. If you're listening, borrowers, be aware of the buy now, pay later regulation and teach your kids to be financially responsible. Avoid all these issues that people are running into. But anyway, that's all we have time for today. Thanks again for listening. If you want to check more content, visit brokerdaily.au. If you want to reach me directly, any story ideas, editor@brokerdaily.au. Thanks for listening.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.